Facebook announced they will be investing another $19 billion into the Metaverse.
This is Felix Hartmann, founder of Hartmann Capital, a VC fund exclusively investing into companies that drive the growth of the Metaverse narrative. Okay, Felix, let's get straight to it. Over the past year, public interest in the Metaverse appears to be declining when looking at the Google trends, perhaps because it just doesn't feel that immersive yet based on what's available today. What's your take on this?
So I think it's both. On one hand, last year was one of the biggest hypes for the Metaverse that could have existed. Every tech trend, I think, goes through these big years, right? Crypto had a really big year in 2017 where everybody talked about it. And then, of course, the market came down, but that didn't change that crypto was here to stay, and it kept growing over the following years. And then same thing happened last year with the Metaverse. Facebook rebranded to Meta. Everybody started paying attention to the Metaverse, and there's a huge trend, but that doesn't mean it's going to go away just because the sentiment goes up. I think we're experiencing the same thing right now with AI. Everybody's talking about AI, ChatGPT 3 and so forth. And so there's going to be a lot of attention, but it doesn't mean that AI is going to go away. And so I think those are actually the perfect times to invest because the hype is gone, meaning valuations come down, the opportunists are kind of slowly filtering out, and only the real builders are what remain.
Adding on to that, what is your Metaverse trend forecast for the coming years?
So the way I would look at it is that how prior investment, current investments, future investments will affect this. So prior investment, that's Meta, right? Facebook already made the big shift to rebrand to Meta. They're already deploying billions of dollars into it. The second one is new current investments, right? So for example, you have Apple coming out. There was a leak that they're having the XR OS, so the new operating system for mixed reality. You've got HTC entering the game, right? And so that not only do you have the already invested capital from Meta, but now you're going to have money invested, time invested, effort, intelligence invested from Apple, Sony with PlayStation VR 2, HTC, ByteDance, the company that owns TikTok. They also have their own headset called the Pico, right? And so that will cause another huge push in 2023 and 2024. And all that doesn't even take into consideration all the extra attention and money that will flow in once an Apple gets involved, right? Like once Apple gets involved, then you'll have another 100 companies that say, we want to have a part of the Metaverse, right? And so I think right now we're in like maybe the worst part of the slump because global markets have cooled down, the Meta hype has cooled down, the Web3 hype has cooled down, right? But the building continues, and there's also just more and more talent entering the space.
And what was your approach when deciding to exclusively invest in Metaverse-related companies?
I think the Metaverse, what's really cool about it is it brings together the best of so many technologies, right? On the one hand, you have the self-sovereign digital ownership that blockchain brings. Then in order to even access the Metaverse, to really fully immersively experience it, you need virtual reality. So for example, like until now, I say social media, gaming, and TV, it's kind of Metaverse 1.0, where we access a digital world through our phones, right? Like if you look at Instagram, is Instagram really there? No, it's a virtual reality, right? It's a really simple UI, but it is virtual. Now we're just going from this 2D screen where we're scrolling and looking at pictures or images, right? To maybe actually stepping in it. And we're going from, looking at moments to having experiences, right? And so I think that's where VR comes in. The place where I think AI will play a big role is in content generation more than anything else, right? Where, for example, in the past, if I want to create a virtual world, I would need to hire, a 3D designer to create this virtual world. In the future, or not in the future, already now. So our game development teams are using OpenAI where they type in, create a maze that looks like this, and all of a sudden OpenAI will create a maze, right? Or they say, create a skin for my avatar, right? That looks like X, and then OpenAI will create it. And so I think AI will play a huge role in creating scalable content for the Metaverse. Virtual reality AR will make it possible to experience it. And then, blockchain will be kind of the foundational layer that will be the ownership layer of the digital world.
What's your playbook for selecting winners in this constantly evolving industry? Can you share any personal frameworks you use to vet companies?
So I would say the top of the funnel for us is, of course, the thematic focus that we say we only invest in the Metaverse, right? There's so many opportunities that will always come over your way as an investor. Sometimes people pitch me wallets for crypto, in which while I invest in crypto, a wallet doesn't really fit the mandate, right? Then I get opportunities for, let's say, regular automation AI. Again, doesn't fit the focus, right? So I think step one is to have a focus where you say, okay, for us, it is the Metaverse and the way we break down the Metaverse infrastructure that enables it, kind of like the plumbing for the digital world. then the content, IP, things like games and so forth. And the last part is the access point, technologies that make the metaverse more immersive. So step one is if we say, okay, we come across a company and it fits this angle, this mandate, then yes, we'll take a closer look. Once we take a closer look, there's multiple different factors that play a role, ranging from the founding team, do they have what it takes really to build $1 billion company, or does it seem more like a hobby to them? There's so much from looking for hard facts to literally just their personality. But then of course also this thing they're trying to tackle, the segment, right? How scalable is it? How much competition is there, right? Sometime this week, we looked at a project that worked in a segment where they're raising at a 30 million valuation, but all its competitors got acquired for, let's say, 50 million. So is there enough upside? No, you're taking a lot of risk for not that much upside, right? So it's essentially looking to see, are they tackling a problem big enough where you can have the kind of returns that validate the risk? And is it a team that can execute that vision?
What are, from your perspective, the biggest challenges founders face when it comes to finding product market fit in the metaverse?
I think the tricky thing with the metaverse, and that's not just metaverse, I think it's any future-oriented technology, is that you have to find where on the spectrum you fall. There is applicable and viable today, but probably somewhat boring, to really revolutionary and visionary, but still kind of far out there, right? Where you say, hey, this is the product that everybody will ultimately use, but it will take us years to get there. We're not quite there yet. Here's a product that we can get to market this week or this month or this year, but long-term, this is not going to be relevant, right? And so to give the two examples of this spectrum, with the Web3 metaverse, we saw things like Sandbox and Decentraland go to market really quick, right? And so they were able to say we were one of the first, right? And as a result, at big market caps. But the reality is anybody can look at that intellectually honest and say, this is crap. I mean, this is not the future of the metaverse, right? They were the first to market. Yes, congratulations. But is this Ready Player One? No, right? And then on the flip side, you have, founders that are trying to build a Ready Player One style world already today. But because it is so, and one of our founders, Laurent from Red Pill, is more on that front, where he's built some of the craziest tech, super immersive, the best VR you'll see, but because it is so technologically heavy, you need a gaming computer to run it, right? And so now the TAM is really small, right? But he's not making the technological concessions just to get it out fast, right? And so you have these two spectrums. You could say, this is obviously way better, this is obviously the future, but these guys are making it more accessible, which means they have a bit bigger attention today, more attention, more users, and they maybe are able to raise more capital. And so I think it's finding the balance between the two and identifying, hey, I guess you almost trading off some form of product market fit for bigger long-term upside.
This episode is brought to you by Lens Protocol. Lens Protocol is a Web3 social graph designed to empower creators with full ownership and control over their content and community. Lens isn't a social media app, it's a protocol that lets Web3 social apps thrive through its open source tech stack. When you create content on Lens, you own it, you control it, you take it from app to app, and you decide how it's being monetized. While Lens might just be the last social media handle you will ever need to create. As Sandbox and Decentraland have the first mover advantage on their side, how do you think they will evolve over the next coming years?
It's tricky. So I'm very bearish on Sandbox and Decentraland, and I have to be, full disclosure, our hedge fund, we do have an active short position on Sandbox. So we're actively betting that Sandbox will be worth less tomorrow than it was yesterday. The reason for that is because I see two issues with this. One, there's something called path dependency where once you go down a certain road, the longer you stay on it, the harder it gets to get off of it, right? And so Sandbox and Decentraland already made certain design choices which make them really, really hard to go back on that, right? And so they're not going to change, they're not going to go from Unity to Unreal Engine anymore, right? That design choice has been made, right? It's also going to be really hard. You already made people spend time creating these items with voxels. You're not going to go away from working with voxels, right? So that's done, right? And so now you're kind of stuck the way you are, and there's only so many things can change. Also, another design choice they made was to sell virtual land, right? So they sold this land. They said there's only going to be this much land. We're selling it. And so now you have two problems. Either young developers that want to build on those worlds, they first need to buy land, right? And so either they can't afford it, and then you don't have builders, or they say, you know what, we're going to make new land. Here's free land. Now you're going to piss off the people that spent $50,000, $100,000 buying virtual land by just creating a new one, right? And so it's, again, you made this choice that kind of like locks you in this catch-22. And so that's issue number one. And then the second issue was that a lot of these companies, once they get this big, they really get inefficient, right? I mean, because they have a $2 billion market cap, there must be so much bureaucracy already. Like sometimes I talk to these Web3 gaming studios, and because they raised, let's say $100 million, they're burning $2 million a month and they have no live games. So I'm like, how are you burning $2 million a month? I've got some portfolio companies that are burning $40K a month and they have a live game. So, I think once you get too comfortable, once you have too much treasury, there's so many bad operational decisions are starting to get made. And all of a sudden, more money means less productive, not more productive.
One company I'm personally really interested in is DressX. What is your thesis behind DressX?
I think a lot of Metaverse initially will be hybrid more so than meaning to replace, right? So, and I think most of my founders say it, right? Whether it's the DressX founders, they're not saying that physical fashion is going away. I mean, they came from the physical fashion world, right? It's going to be like, it's just another way to express yourself. Same thing with Laurent, the founder of Red Pill. He's a huge music guy. I mean, he's gone to Burning Man for like the last 20 years, right? He loves that world. He's not saying that concerts and festivals are going away. This is more like a new way to also express music digitally, where you can have a hybrid event where a DJ can perform real-time live at Coachella, at Burning Man, and then also at the same time, parallelly, be in the virtual world, right? And so going back to digital fashion, I just think we're already spending so much, like, what is fashion about a lot of times? It's about expressing yourselves, it's about status signaling, it's a mix of these things, right? And so we're already spending so much time in the digital world where signaling and expressing yourself digitally might matter as much, if not more already. Doesn't mean that we're not going to stop wearing, clothes, right? I mean, like, but day to day, like, I might always wear black t-shirt and black jeans, right? But then if I say, hey, I want to try something new on social media, it's easier for me to buy a $5 DressX item and like try a new look on Instagram or on Zoom or whatever, than to every single day I go out, wear something new. But I would say, because the digital world has so much less friction, people will probably consume 10 times as much digital fashion as they consume physical fashion.
And adding on to that, how do you see the future of fashion evolve in the digital space?
Yeah, I mean, I think it's becoming more and more accessible. In the last 12 months, you've had a couple big things happen. We had Instagram add NFTs, right? So before I bought, like, let's say somebody mainstream buys an NFT, their friends are not going to see it. The only people seeing it are the ones that are going around, like, OpenSea and typing in somebody's ENS address. Now, if somebody can buy and collect like dresses, outfits and whatnot and show them off on IG with the verification badge that this is an NFT they own, it's already more meaningful, right? Twitter did the same thing where they added like NFT profile pictures. Like Snapchat, for example, Snapchat is very closely working with most of the digital fashion startups. And so the more the utility of this digital fashion gets integrated into the existing social networks that people are already using today, I think the more people will buy into it because they're getting something out of it. It's not just sitting in a wallet.
Looking back, what has been a lapse of judgment on your end and what did you learn from it?
I think the first one that comes to mind is that I think I was too radical in the beginning. I believed that everything needs to be decentralized. And I would even give talks on that where I said, like, every single company, every single startup, everything will be decentralized. Nowadays, I find myself more on the front that I say the base layer needs to be decentralized. The infrastructure on which everything is built should be decentralized. But startups and most companies, I think, will ultimately remain centralized for the mere reason that in the beginning stages, you need a leader. It's that simple. Like, you need somebody who ends up making the decisions. You need somebody where the buck stops with them. They have to take responsibility. They have to take risks. Because decentralization, it's shown itself to be a lot like the government, right? What is the government trying to do? The government is trying to decentralize political power, where you have Congress, 500 people sitting in a room discussing things. Well, split up with the House and the Senate, right? And we always complain nothing gets done. Why? Because there's 100 cooks in the kitchen, right? And so we found the same thing with like DAOs, where it's like, it sounds great in theory if there's like 10,000 token holders and we all make decisions together, right? But then 9,900 of those 10,000 have no clue what's going on. They don't care enough to vote and go out there, right? And then if there ever is a discussion like, man, do those 10,000 people don't have enough of the data and the facts to even make the right decision. But yeah, so I'd say, any company, as long as it's small, medium stage, should be centralized. And then once it is big enough where it becomes a public good, it would be better if it becomes decentralized.
We've come to an end, but to close it off, what is your overall market outlook for the next 3 to 5 years?
I think there's a big paradigm shift going from high inflation and historically low unemployment, that in a few years it will be deflation and historically high unemployment. And the reason for that is that technology itself is heavily deflationary, right? So for example, AI. AI is going to automate a lot of jobs. AI is going to reduce production costs. AI is going to increase competitiveness where like a small team can now do what a team of 100 did before, right? And so AI is going to be deflationary on one end. Then you've got the metaverse, where in the metaverse, commodity prices don't matter that much, right? Like the price of textile doesn't matter for digital fashion, right? The price of gasoline doesn't matter when you're traveling in the metaverse or when you're going on a Zoom call, right? So a lot of these ideas of rising commodity prices causing even more consumer good inflation will matter less when it's digital. And then the same thing goes for blockchain, where blockchain removes inefficiencies, removes middlemen, and it also makes things more efficient. And as things are more efficient, it's deflationary, right? And so the idea is that all these technologies are having deflationary pressure. And then if you want to add one more space, the cost of transporting goods to space since the 80s has dropped 99%, meaning if it cost you $100 before, it now costs you $1. And by 2050, I believe, it's going to do the same thing again, where if it costs you $1 before, it costs you 1 cent now. And so what's in space? A lot of commodities, a lot of goods, right? So for example, if we can start mining asteroids for gold and whatnot, right? But so if you just take all these things into consideration, say look, every technological progress is causing deflation. And at the same time, because of AI and so forth, unemployment will start going higher. And as unemployment goes higher, what does the government need to do? They need to start easing. They need to start sending out helicopter money again. And as that happens, what's going to happen? Markets go up, right? And who's going to benefit the most? The very assets that are causing deflation, right? And so I'm ultra long technology, essentially, whether that is crypto, metaverse, AI space. I think 2023 might be the first year for that. Maybe there's more pain in Q1, but the way I put it in my article is I said, trying to time this entry on these logarithmically fast growing technologies is like trying to pick up shells as there's an ebb coming before the tsunami, right? You can see the tsunami, it's coming, right? Why are you wasting time on this ebb, right? You're not going to get, it's coming. So from that angle, I think, yes, there might be more pain in 2023. I don't know the short, nobody can time the short term perfectly, but because the long term is so clear and so big, I think it just makes sense allocating to these assets now when the market already is down 80%. Right? Yes, maybe Bitcoin instead of being at 16,000, maybe goes down to 14,000, 12,000. But is that delta really so important compared to missing 16 to 100?
If you enjoyed this and are keen to learn more about the metaverse, don't forget to subscribe.